Good morning, one and all. Welcome to this fresh edition of Weekly Commodity Podcast with me, Ravindra Rao from Kotak Security Commodity Research Desk. And as always, I'll guide you through the macros and price action for commodities. Last week, renewed fears of a lingering recession in the US weighed on global risk sentiments. US dollar index that recovered from a strong support near 100.80 swung between gains and losses and ended the week pretty flat near 101.70. At one time, it traded higher at about 102.30, but it didn't sustain as string of weak economic data from the US renewed concerns that the world's biggest economy is heading into recession. On the price front, as mentioned last week, uh, the dollar index is taking strong support near 100.80, which was the low hit in February as well. And it is trading in a broad range of 102.5 to 100.82. So we expect this range to continue. So once this range is taken out, we might see a directional move in a dollar index. 102.58, if it breaks, it might go up till 103.48, which is the 52-day moving average resistance. And on the lower side, if it breaks 100.80, then we might see it drifting lower towards 100 to 99.50. So this is the range that we are expecting for this week. That is between 102.58 to 100.82, and we need to wait for a break on either side. Coming to commodity specific, prospects of further rate hikes in the US coupled with the global inflation concerns has pushed US Treasury yields higher last week, in turn weighing on non-yielding bullion. COMEX gold plunged to $19.80.90 per troy ounce, witnessing second weekly loss. Silver witnessed downside in line with weaker gold and a mixed trend in industrial metals. Both SPDR gold and iShares silver holdings saw outflows in the previous week. With FOMC meeting in focus and rising prospects of higher rates for longer, we don't deny the odds of some pullback in gold prices in this near term. However, higher rate means more pain for the economy going forward, bolstering our medium to long term bullish view on precious metals. On the price action front, COMEX gold is expected to take support near $19.74 an ounce. And if that said support is penetrated, only then the fall might deepen towards 1946 per troy ounce, which is the next best support. In case of MCX gold, we are seeing a support in the near term gold near 59,000 in the near contract, close to 59,300, and after that the support is straight towards 58,400. So I think 59,300 should be a decent support. And similarly on the upside, resistance is pegged near 60,600. So above that, we might again see prices moving higher. So it can be a broad 1,200 point range in case of gold. In case of silver, COMEX silver is holding on to the support near $24.60 per troy ounce, even after a bearish engulf candlestick formation on daily chart. Having said that, if the bears break the support of $24.60 per ounce on a daily closing, the fall might extend till $24 per ounce, which is the next best support. In case of MCX silver, the support is near 73,000, which the bears might target, and from there we might see some kind of a bounce back. And similarly on the upside, 75,600 to 75,700 remains a strong resistance. Above that, we might again see prices moving higher. So overall, for precious metals, there is a possibility we might see some more downside this week before it moves on to the another leg higher. Coming to energies, crude oil closed the week lower by more than 5%, its first weekly decline since banking crisis in mid-March. And in case of industrial metals, most of the base metals ended extended losses as US recession fears weighed on demand outlook despite encouraging Chinese GDP figures. Apart from disappointing US data releases, Fed Reserve Beige Book Survey 2 stated that the US economy stalled in recent weeks, with hiring and inflation slowing and access to credit narrowing. Oil prices may remain soft on easing supply concerns as Iraq is likely to restart the export of crude oil from Kurdistan region by end of this week. On the technical front, WTI crude oil failed in sustaining above the multiple resistance break last week. We had mentioned that it has to sustain above that, which it did not. As a result, the price corrected, almost filling a gap till $75.72 per barrel. Um Crude oil is currently trading close to the support 52-day moving average support near 76.48, and after that a rising window support is near 74.70 per barrel. If the set support zone holds, a bounce back towards $80 can't be ruled out. But the overall view in crude as of now remains sideways, and we might see a further bullish leg in crude oil only if it sustains about $84 to 83.50 zone. And in that scenario, the prices might move much higher. Till then, we expect a range bound move between say $75.70 on the lower side and $80 on the higher side. To conclude, as of now, economically sensitive commodities are struggling for direction as participants assess the latest inflation data and await more data before a major central bank meeting in the first 2 weeks of May. U.S. quarter one GDP, Bank of Japan monetary policy, and Fed's preferred PCE price index might be in spotlight for the week. Well, that's all for this edition of Weekly Commodity Roundup. Good luck and trade safe.